We're headed. We've entered the second half of the year. Today's trading session has been quiet, but lots of cues lined up. The spotlight will be on the central bank action globally and back home. Earnings season. Jitendra Sriram from Baroda BNP Paribas Mutual Fund is now with us on the show. Jitendra, it just feels like one big wild round trip for the equity markets in the first half of the year. So much has happened, but we're pretty much back to where we were by the end of it globally. How are you feeling about the markets from here on? And how do you expect the second half of the year to play out?
Good afternoon, Sriram, and a warm welcome to all your viewers as well. So first of all, I would think that markets near term might be more range bound because there are three very important events around the corner. One obviously is the global one of US spending increase and all that. And what implications it has for currency is going to be very critical because expansion in the balance sheet, etc., or the debt in the US could actually have a weakening effect on the currency, and we'll need to monitor how that plays out for our markets. The second aspect is obviously Trump's D-Day in terms of tariffs, July 9th, and we'll need to take it how it progresses from here on and what actually comes out. And that's going to be very critical for a lot of sectors here. And obviously, third is the one you mentioned. We are entering earnings season in probably a week from now. And that is again going to have a little bit of nervousness in market because the direct tax collections in the first quarter were not very buoyant. So to an extent, although it's a rear view indicator, and as our growth accelerates from here, we should improve from here on. But at least to the extent that what we saw in first quarter could be a little bit of a tempering effect overall.
All right. Hi, Jitendra. Good afternoon. Good to see you, Ben. You're playing the banking theme, though. But, Jitendra, it seems, at least in the last few sessions, the smaller banks are outperforming the larger names. Yes. You, though, are loaded up on the larger names itself. How do you think this is playing out? Is it a valuation game? Is that, you had the Yes Bank deal that took place? Probably you'll have an IDBI bank that gets sold in this fiscal itself. So is that causing some excitement among the smaller names?
So I would put it like this. I think there was definitely a kind of a trade in the smaller banks because, the cost of deposits and all for the smaller banks was far more higher than the larger banks, which had a far bigger liability franchise to benefit from. So to an extent, what has happened is that when the rate cuts started filtering through into the markets, these banks actually lowered their deposit rates a lot more. So to an extent, market has been a little bit more appreciative of that. The magnitude of cuts in, say, the bellwethers like an SBI or an HDFC would have been a little lower. But having put that in context, I think one very surprising thing that has happened in the banking space is that there was a lot of expectations of NIM compression coming in because deposit repricing happens usually a little softer than loan repricing. But this time around, everybody has been like really off the block in terms of deposit repricing. So, the magnitude of NIM compressions in market anticipated, it may probably be a little better than that, and the actual outcomes may be a little more favorable than compared to what was anticipated earlier.
Will that be a trigger then? Won't that be a trigger if the NIM compression is going to be much less than what was feared? Do you expect upgrades to come through for the banking space? Would it be predominantly for the large cap banks? And what about NBFCs?
Yeah, so I would say that it is definitely a trigger which can come through. So to the extent of NIM compression that markets are modeling in, I would say that although it may not be very evident in the first quarter numbers because it's happened towards the fag end of the first quarter, but I would say the subsequent quarters could actually start seeing that impact filter through that the NIM compression is not as severe as thought. And I would think it would impact across the board, large caps as well, and also the NBFC segment, because what we have seen in terms of even the money market rates, the overnight rates, etc., the way they have come off, I think it's a great benefit to the NBFC segment as well. And tomorrow, of course, there's obviously a big listing as well on the NBFC side. So that will also determine the cues.
All right. What about, from the broader markets? How are you feeling about it? There was this sharp slam dunk that took place at the start of the year in the first 3 months or so for a variety of issues, including euphoria that's playing out. But actually, the biggest money has been made out there because those that were brave enough to buy, they made some money. How are you feeling about that space? A lot of that froth got cleared out, or do you think there's still some room for it to correct?
I would say that it has been completely a currency-driven market in a macro sense. In a sense that what we saw in the first quarter was largely because of the way the dollar was strong, holding up strong in the first 2 months of the year. And ever since the dollar started weakening from the month of March onwards, you've seen the markets on an explosive note. So to an extent, I think it has been that way. And also, what has happened related to that, India got a little bit of ammunition from the peace dividend as well when ceasefire was announced and all that. So that has also helped the Indian market and the sentiment towards it. So those are things that have generally played out well for the market. But I would expect that the next, I think we have probably, that kind of pain points we are going through in the first couple of months of the year. That is now done and dusted. Now market will await some solid cues to get at least some comfort on the earnings momentum. Because if I look at all other aspects, growth is recovering, monetary policy is easing, all the macro indicators are in place. The one thing that is falling a little short of expectations is probably the earnings momentum. And once that starts improving, I think markets will be good to look up from here on.
You're largely overweight pharma, right? Most of your funds have a fair amount of holding of pharma, and then plus you recently launched even a new fund catering to pharma and healthcare. In that, tell us broadly the view on pharma, which are the pockets that will do well, and any sectors or any stocks that look good at this juncture.
So pharma overall, I think there are multiple drivers. So if I look at even some of the concerns that were there from a US perspective, that there could be some price clampdowns, etc., etc. By and large, see, generic drugs do see price tapering of about 5-6% annually, year after year. So I don't think that's a big problem for them to manage, given the gross margins in the business. So that has been something we genuinely feel quite strongly about, and the fact that pharma, if you raise prices of generic drugs, even in the US, the trouble will be that insurers outgo will start pricing because it's largely an insurance-driven market, Medicare, Medicaid, and all that. So to an extent, I don't see too much of a negative impact coming through from tariffs, etc., there on the pharma side. The second part, I think, is that CDMO, etc., as a space is really growing. And what we are seeing off late, and you can see it in multiple areas, like, in things like, the recent drug approvals that are coming through in India on the weight loss drugs, the diabetic drugs, plus earlier you had on shingles as well. A lot of multinational companies also becoming fairly active on launching innovation products in the country. And I think that is becoming a fairly sizable market because of offtake, there is enough of demand for these drugs here, and that is also kicking up. So that is an added trigger for the pharmaceutical space.
Okay, all right, Jitendra, always a pleasure having you on the show. Thanks a lot for joining in and filling us in with your inputs on the markets. And how do you see the economy shaping up as well? Well,
Thank you.
For the time being, we slip into a break. As always, Nimesh is waiting